Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglikar. It's the 29th of September 2023 and here are the questions we'll be answering today. Who is to blame for India's pilot shortage? Is junk food the new cigarette? Are consumption stocks a good bet ahead of festival season? And what is government's borrowing program and calendar? The recent crisis in Akasa Air has once again turned the spotlight on the shortage of pilots that has been plaguing the airline industry for quite some time now. While the fledgling airline has got some relief from the quote, it would be a while before things get back to normal. And with over 1,100 planes expected to join the existing fleet of about 700 in the next few years, the question on everyone's mind is, who will fly them? In today's first segment, Tariq Ahmad tries to find out the reason behind this pilot shortage. Let's take a look.
Akasa Air added the 20th aircraft to its fleet in the first year of its operation. But India's youngest airline was in the news for suing 40 of its pilots who quit without serving notice period. The airline had to cancel more than 600 flights in August and more than 700 in September. While most of the pilots are understood to have accepted offers from Air India Express, the crisis points to one of the major issues the Indian aviation sector is facing, which is pilot shortage. Air travel is on the upswing and carriers are drawing up strategies to capture a large pie of passenger traffic. But non-availability of pilots and flight attendants is forcing airlines to revisit their growth strategies. Earlier this year, Business Standard reported that Air India has inducted 100 pilots for its Boeing 777 aircraft which it flies to the US. The carrier hired an extra 140 expatriate pilots to support its expansion. But a mismatch in the addition of aircraft and non-availability of crew resulted in the airline delaying and cancelling some of its flights. No wonder there is a scramble for pilots in the Indian aviation sector today, especially for the experienced ones. This, industry observers believe, could make the smaller airlines more vulnerable when it comes to retaining their pilots.
Assumes that the government will continue to give license at the speed of 1200. At the moment, the number of facilities in the country of flying schools, etc., and all is not adequate.
According to the Directorate General of Civil Aviation, there were 8,508 pilots flying in India in 2021-22. In 2019-20, this number was 9,002. Each plane requires 12 to 14 pilots for regular operations, as per industry standard. Considering the 1,150 aircrafts order made by Air India and Indigo and others, 15,000 to 18,000 pilots will be needed in India in the coming years. It is expected that 150 to 175 aircraft will be inducted in the year 2024, which will require 1,800 to 2,000 pilots to fly them. Though the number of commercial pilot licenses that DGCA issues has been increasing in the past few years, it is clearly not enough to sustain this demand. In FY23, DGCA issued 1,272 commercial pilot licenses. According to industry projections, it was expected that India would need 1,000 new pilots in a year for the next 5 years. But the recent orders made by Indian Airlines will need more pilots than what was expected before. Currently, there are 35 flying training organizations or FTOs that are functioning at 53 different bases across India. And unlike before, DGCA has started giving licenses to private flying academies.
Tatas have started their own academy, so they are obviously aware of this problem, and therefore they have started now. They've decided to start training pilots themselves, which will give them sufficient amount of volumes. Now, what that volume is going to be is very difficult to say at this moment of time. Indigo also has its own plans. They also are looking at training pilots. I mean, Akasa has already said that they are training enough pilots for nearly 30 aircraft.
There has also been an existing trend of Indian pilots moving to Gulf countries for work. While there are many Indian pilots working abroad, very few foreign pilots prefer flying in India. According to the DGCA, only 67 foreign national pilots are flying in India as on date. Industry insiders say the tax deducted at source and other regulatory issues have been driving the foreign pilots away from Indian skies. Udit Agarwal of aviation consulting group CAPA India shares a roadmap to address the pilot shortage.
It has to be a three-pronged approach. Of course, the independent flight training organizations and the simulator schools need to ramp up their capacity. As I said, 36 flight training organizations and 6 ATOs with 47 simulators. These need to increase substantially. Then cadet programs and airline run institutes, as you're saying, are going to be the second prong where capacity has to be increased. And the third will be the natural way of bridging gaps, which is foreign hiring or FATA. So the three of them have to move in parallel, and that is how eventually we will be able to bridge this gap of demand versus supply.
CAPA India believes that the pilot shortage won't be severe in the near term, but anticipates a serious shortage in the next fiscal. Considering that 14 pilots are required for narrow body and 25 pilots are required for the wide body aircrafts, airline will need substantial induction of pilots in the future. Aviation analysts believe encouraging new private pilot academies, better working conditions, and tax incentives will also attract more pilots willing to cruise the Indian skies.
When at the airports, do you often feel the urge to pick up a burger or a pack of chips from those shiny food courts? Well, you're not the only one. But the number of people who are bidding adieu to junk food is also swelling. Thanks to increased awareness about their harmful effects. Just a few days ago, public health experts, consumers, and patient groups made a fervent appeal to the government. They wanted it to check the rise of consumption of junk foods, claiming that non-communicable chronic diseases related primarily to junk and ultra-processed foods are fast becoming a health emergency. So is junk food the new cigarette? Ayush Mishra finds out.
Our worst fears have been confirmed by a host of studies in the last few years. Burgers, pizzas, sandwiches, noodles, chips, soft drinks, patties, candies, chocolates, french fries, and many more are on the list of food items which are undoubtedly sumptuous but not so healthy. They are called junk food or fast food too. They are ultra-processed food high in sugar and salt content, and in some cases come with a dash of saturated fat too. These are pre-prepared or packaged food with low nutritional value. Several studies have confirmed that junk food has replaced tobacco as the leading cause of early death globally. The World Health Organization is worried too. In July this year, it issued guidelines on policies protecting children from the harmful impact of unhealthy food. It urged countries to implement comprehensive mandatory guidelines to protect children of all ages from the marketing of foods and non-alcoholic beverages high in saturated fatty acids, trans fatty acids, free sugars, or salt. And now, on September 22nd, a coalition of public health professionals, consumer organizations, legal advocates, and patient associations collectively urged the Indian government to take action against the increasing consumption of high fat, high sugar, high salt, and ultra processed foods.
All the correct information should be placed on the product itself, and the consumer has to become savvy and see what are they buying and what are they eating. The labels should be simplified. Actually, there should be some regulation saying that simplify the labels and In a very common and plain English, tell people what does this contain.
According to a study published in the journal Addiction, highly processed foods meet the 3 criteria of an addictive substance as outlined by the 1988 SG report on the addictive nature of tobacco products. Like tobacco, these food items trigger compulsive use, have psychoactive effects, and are highly reinforcing.
Both tobacco per se and junk food are addictive, yes. They are addictive in nature and sinks in the bloodstream in a way that they actually attract more consumption. So junk foods are headed towards addiction, especially for children and teens. And sooner or later, it can be equated with tobacco.
According to an estimate, India may suffer a loss of nearly $850 billion by 2060 due to health issues associated with junk food. Nutrition Advocacy in Public Interest, or NAPI, which calls itself a think tank on nutrition, has demanded stricter regulations on advertising of junk food on the lines of cigarettes. Experts also believe that existing regulatory policies are ineffective. They claim that most advertisements of junk foods are misleading and especially directed at children and adolescents.
Junk food advertisements make you believe that I want to eat this. That's the difference. That's why the advertisement part should be controlled. Then people make a choice. Once they know everything, if they make a choice that I want to eat this particular product, so we should allow the people to eat. You can't ban people that don't eat this, don't eat that, right? You can't ban them. You can only advise them. But give them information first that this food is risky.
So should health warnings be similar to those on cigarette packets?
What is injurious to health depends on the context, right? The same thing, if I have once in 6 months, it's not injurious to health. So therefore, if you have to put a label on it saying it's injurious to health, it may not be correct. Something which is universally accepted, like a cigarette, if you have 1 or if you have 10, it is injurious to health. So that label makes sense. But something like even roti, for example, many people say roti is not good. So do you think we'll put a warning on wheat, on atta? That does not make sense. So it has to be an education based approach, not a sort of warning based approach.
So what could be the ideal approach?
The answer has to be that we have to give people healthy options. We have to create an environment where people have easily accessible healthy food. Right now, a lot of people can't afford healthy food. There are many studies about this, that a lot of the people who are in the poorer segment, who don't have the resources and means, actually have junk food. They go to McDonald's, and in the US especially, having a McDonald's burger is much cheaper than having healthy organic food. So the answer is we have to give people healthier options and easily available and affordable options.
The government has made a big move in that direction by trying to bring back millets in the mainstream. Several FMCG companies too have come out with products with millet contents, like millet biscuits, millet muesli, millet flakes, etc. But they are still costly and not easily available. Meanwhile, increased awareness about the harms of ultra-processed food will go a long way in checking their use. While it may not be easy to eliminate junk food entirely from our lives, reducing its aggressive promotion is a critical step towards a healthier future.
If implemented, the warning labels on junk foods may nibble at FMCG companies' profits. Meanwhile, consumption-related companies have recently seen the heat of input price inflation. But the coming festival season could turn their fortunes around. In our next report, Harshita Singh finds out which consumption pockets find favor with analysts ahead of the festival season.
The recent equity market weakness has sobered up investor mood. but the coming festive season is keeping analysts upbeat on stocks related to the consumption basket. They expect FMCG, retail, and consumer electronics segments to especially do well over the next few months and suggest investors should selectively take bets in these pockets.
Festive season is going to be a good theme for the consumption as a whole. We believe that FMCG sector overall should do well with recovery in the rural demand, and with festive season coming around, it should add on to their volume growth. So we should expect good volume growth along with better margin expansion. The earning growth visibility is quite good for FMCG sector. In this space, we like ITC, Godrej Consumer Products, and Tata Consumer Products. Retail space, we believe that branded apparel and QSR both should see a good recovery prior to the festive season and during the festive season, and along with expected good wedding season, the overall second half for the retail space should be good.
The FMCG sector saw firm volume growth of 7.5% in the latest June quarter, led by urban markets, as per Nielsen IQ. While rural demand could not pick up meaningfully in August due to vegetable price, inflation, and poor monsoon. Companies have a mixed outlook on rural recovery, but the broader commodity inflation is receding. Hence, HDFC Securities does not see a risk of more earnings cut for the FMCG players for the remaining quarters of FY24. Analysts are also bullish on consumer electronics given easing input prices and recovery from unseasonal summer rains. The segment thus is also expected to see strong sales in the next few months. Investors looking to capitalize on festive season can consider consumer electronic stocks, especially with a focus on smartphones, TVs, and refrigerators, said Sonam Srivastav, founder at Right Research. Some listed players in the space include ITI, Dixon Tech, and Optimus Infracom. Meanwhile, the paint sector, which is also tracked around the festive season, is expected to underperform. While a delayed Diwali and a favorable base will lead to strong sale volumes in September and October, the surging crude oil will keep margins and stocks under pressure, analysts say. Entry of other large players, such as Grasim, also remain as concerns. ICICI Securities analysts thus advise investors to stay underweight in paint stocks. At the bourses, shares in the broader space have been mixed in the July quarter so far. Bajaj Electricals, Orient Electric are top drags among consumer appliances, while Voltas has gained 14%. Britannia, Godrej, HUL are down 7 to 8% since June end, but Marico is up 10% in the FMCG basket. In retail, D-Mart has lost 6% in the 3-month period, while Devyani International and Trent are up 11 to 20%. Thus, investors are advised to selectively approach the consumption sector to cash in on gains from the festive cheer ahead. Today, on September 29, equity markets will track global market cues for direction.
He's making plans for an early retirement. Business Standard.
Meanwhile, the government recently said that it will borrow 6.55 trillion rupees through bond issues during the second half of this financial year. India has projected gross market borrowing at over 15 trillion rupees for this fiscal. In today's Decoded, Vasudha Mukherjee tells more about government's borrowing program.
To meet its expenditure needs, the government resorts to borrowing. In India, this is done by issuing government securities known as G-Secs and treasury bills known as T-bills. These borrowed funds are categorized under capital receipts in the budget document. While the Department of Expenditure under the Ministry of Finance handles the borrowing program, it is finalized by the Government of India in consultation with the Reserve Bank of India. The need for government borrowing arises when the revenue generated from taxes and other sources falls short of covering the expenses outlined in the government's budget. That is why the government announces an annual borrowing program in its budget to bridge this fiscal gap. The central government follows a semi-annual borrowing calendar, while states follow quarterly calendars. The first half of the centre's yearly borrowing plan is announced with the union budget, while the second half may commence in late September or early October. The government relies on various sources for borrowing. This includes market borrowing, small savings fund, state provident funds, external assistance, and short-term borrowings. Market borrowing is the primary source of financing the fiscal deficit. Under market borrowing, the government also issues special securities to entities like oil marketing companies, fertilizer companies, and the Food Corporation of India. These are often referred to as oil bonds, fertilizer bonds, and food bonds. These securities serve as compensation to these entities in place of cash subsidies and are typically long dated with slightly higher coupons than regular securities. While they do not qualify as statutory liquidity ratio securities, they are eligible as collateral for market repo transactions. Government borrowing can impact the economy. Firstly, when the government borrows extensively from the market, it leaves limited space for private sector entities and corporations to access the market for their financing needs. This can crowd out private investment. Secondly, substantial government borrowing can lead to increased interest rates across the board. This in turn raises the debt repayment burden of the government and drives up the cost of borrowing for other entities. High interest rates can also hamper economic growth by discouraging investment.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The government is issuing 50-year security for the first time due to market's demand for longer duration securities. Well, that's all for today. For more news, views and insights, please log into business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.